Hey guys, what's going on? It's me, Mr. 512, your go-to realtor for all of your Austin, Texas area real estate needs. So, brief intro, I'm Spencer Hernandez, realtor with Central Metro Realty. Native Austinite, born and raised in East Austin, now coming to you from Pflugerville, Texas. Okay, so this one's for the home buyers out there who have the big question. Is it a good time to buy? Short answer, yes. It is absolutely a great time to purchase a home. Rates are down from nearly 8% late last year to around 6.85% right now. There are less buyers in the market, which means less competition. As a result of current rates and a reduction of buyers in the market, we have also been seeing price reductions on homes in the area. Overall, this means you can get a heck of a deal on a home right now compared to if rates were lower. Here, let's take a look at that last statement. Potential home buyers are waiting for a turn in interest rates, similar to the 2 and 3% rates from 2021, which was a complete anomaly. In 2021, rates were abnormally low due to one main factor. That's right, COVID. The Federal Reserve made multiple efforts to stimulate the economy due to the pandemic. Assets like mortgage-backed securities increased, which further drove down rates. Economic uncertainty and low inflation also played a role, as they both tend to keep rates lower. Overall, these factors and others created an environment for historically low mortgage rates, not seen since maybe 2012 when the rates were around 3.65%. But that was also due to the aftermath from the 2008 financial crisis. So really, looking all the way back to 1978, we've never really seen rates under 5% outside of a crisis. All right, enough of the history lesson. Let's do some role play. No, not that kind of role play. Well, maybe. Hit my DMs, we'll see what happens. So for this example, we'll look at a $400,000 home with a 5% down payment and 6.85% rate. We're looking at roughly a $3,900 mortgage. Now today, that 400K home could quite possibly be had for less. Maybe 390, maybe 380. How? Supply and demand. Look, low demand plus high supply equals lower prices. Another way to look at this is less buyers in the market coupled with current interest rates plus a larger inventory of homes equals lower prices. Now, since we're role playing, let's say this time next year, rates drop a full point, down to 5.85%. That same 400K home with 5% down, we're now looking at maybe a $3,600 mortgage. That's $300 less. Sounds amazing, right? Yes and no. More so no, not really, and here's why. There are a ton of buyers waiting on the sidelines for rates to go sub 6. Now, if and when that happens, we're going to see a massive surge of home buyers entering the market. What does this mean? Two words again, supply and demand. Look, if there's no massive increase of available homes to match the increase of buyers flooding the market, we now enter what? Low supply plus high demand equals higher prices. Couple that with home appreciation, and now that same home for 400K, you could have had today for maybe 400, maybe 380, if not less. Next year, it could very well end up costing 425, if not more, and you're right back to your $3,900 payment, even with the lower interest rate. Now, I hate to say this because everyone is, but it's true. It will be better to buy now for a good deal and refinance 2 to 3 years later when rates drop. Just something to think about, and this brings us to the end of our video. Again, I'm Spencer Hernandez with Central Metro Realty, servicing the Austin, Texas area. My number one goal is to ensure that you're educated and informed to make the best possible decision for yourself and your family. If you have any questions you'd like me to answer or would like to get a hold of me, my contact info is in the link in the bio below. If you like this video, please hit that like and subscribe, and of course, sharing is caring. Let me know in the comments what you would like me to talk about next time, and I'll toss up a new video in a couple of days. Cheers, y'all.